You hear it all over the place that investing in real estate is a wise decision. Many people look at this from one angle of having their own home. Others suggest that you need to buy an income producing asset. And some think that having a REIT, real estate investment trust, is the best way to go about it. Well, I'm going to break that down here in this video today. First thing is, what exactly is a REIT? The second is how do REITs perform? And the third being other options. So in this video, I will encompass the entire spectrum of what it means to invest in real estate, and we'll break that down real simple, real easy. Let's begin. So the first thing is, what exactly is a real estate investment trust? Well, you might hear of them being called a REIT. A real estate investment trust, REIT, is a company that owns, operates, or finances income-generating real estate. Modeled after mutual funds, REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any property themselves. So you would often see some of these really big names. They have their own investment companies and they bring in billions of dollars and they buy these huge properties all around, and those are the companies that people would easily buy a stock from. They would get the investing into real estate, but it's not actually owning the real estate themselves, but they can take advantage of it. And so this is what happens for a lot of people. They want to get into real estate, but they don't actually want to spend the time to deal with everything that encompasses this. This gives them a way to get on in. So that's the first thing. Now let me show you the next. You got to look at this. These three REITs are down 50% this year. This is important because for a lot of people, they don't realize what they're getting into. They think it's real estate, it's safe, I'm going to make money consistently. But that is not the case. There's many examples here. They show you the real estate sector, select sector, ETF, declined by 27.8% this year. Despite the inflation protection typically associated with the real estate sector, REITs underperform the broader equities market and have overcorrected compared to private real estate. So it is not the same thing. You gotta be aware of that. And you gotta also know, what is this REIT really buying? Is it buying the commercial property that's only retail? Is it only going to be office buildings? Is it residential real estate? You got to know that before you get in. They give you a few examples. Broadmark Realty Capital lost 61% year to date. And it goes on, okay? That's one example. But then you look at this. Blackstone REIT offers sweet deal on $4 billion cash infusion. So these companies like Blackstone are able to get literally billions of dollars influx, even at a time in which real estate's moving down. And who do you think benefits from this the most? Is it you, the investor? Or is it Blackstone? And obviously, it's Blackstone. So we got to remember that when we get into a REIT, who ultimately stands to gain? Who benefits the most? It's not saying that you can't benefit. You might do very well in a REIT, but just watch out. Okay, just be very, very careful. Now, let me show you the next one. Become Uncle Sam's landlord. Earn yields up to 16.4% with these REITs that rent to the US government. What am I talking about here? This is interesting. They show it to you in this case. Investors don't have to worry about screening or evicting tenants. Instead, they simply sit back and enjoy the dividend checks rolling in when they pick a winning REIT. Wouldn't that be fantastic? Wouldn't that be great? Well, here's a couple examples. Easterly Government Properties, DEA. Easterly is not the largest REIT, but it stands out among its peers for a very simple reason. The company's mission is to acquire, develop, and manage commercial properties leased to the US government. Isn't that good? You know, they have a bottomless pit of cash, right? Office Properties Income Trust, OPI. That's another one. And then they just go into it. If you want to, you can check this out as a couple examples. The point here is, just like I have said before, just like I have made this point, when you look at where the government is spending their money, if they're buying or let's say, putting their money into green energy, they're putting their money into nuclear, We know that the government is going to spend trillions of dollars over a period of time. And so we don't have to be worried about, is this really going to be viable? Even if it's not, the government's going to continue to pour cash in. It's the same thing in this case right here. So pay attention. If you're going to get into a REIT, make sure you're getting into the right one. You don't want this to happen to you. These 3 REITs are diving to new 12-month lows. These are the 4 best performing REITs in December, and then we have the 5 best performing REITs of 2022. I mean, I could show you that if you are interested, but essentially you're looking at Getty Realty Corp, GTY, you're looking at VICI, you can see GLPI. Look, if you want to check it out, you can check it out. The point here is that some of them are going to do well, some of them are going to do not so well, even at a time in which the market has trended downward. The REIT does not correspond to holding the physical asset. And that's really important to understand. Owning real estate that you personally hold rather than investing in a real estate investment trust, REIT, offers a number of potential benefits. One key advantage is the ability to have more control over the asset. When you own a property directly, you can make decisions about how it is used and managed, and you have the ability to make improvements or renovations that can increase its value. Another benefit of owning real estate directly is the potential for tax benefits through depreciation. When you own a property, you can claim depreciation expenses on your tax return, which can help you reduce taxable income. This is not possible when you invest in a REIT, as the trust itself claims the depreciation expenses. There are also potential cash flow benefits to owning real estate directly. If the property is generating rental income, that income can be used to help offset the costs of owning the property, such as mortgage payments, property taxes, and maintenance expenses. That being said, there are also risks and challenges to owning real estate directly. These can include the need for significant upfront capital to purchase the property, the responsibility for managing and maintaining the property, and the potential for vacancies and other issues that can impact the property's income generating potential. Investing in a REIT can provide a more passive way to invest indirectly in real estate without the need to handle the day-to-day management and maintenance of the property. It is important for investors to carefully consider their own investment objectives and risk tolerance when deciding whether to invest in real estate directly or indirectly through a REIT. This is so key, and I just wanted to bring it to you because many people think a REIT is actually investing in real estate, when I think I made my case here in this video. This is one example of what I believe is the right thing, and that is a multi-family residence. If you're going to get into real estate, you want cash flow, this is the thing. Now, I'm just showing you one example. It's a big thing, but you can see that sometimes you'll find 10 units in one, 15 units in one, 30 units, whatever the case is. You may not have enough money for that, but you can get 10 people together, say, I'm going to manage the deal. I'm going to do it. I'm going to find it, manage it, and everything. What kind of capital can you put on the table? This is going to be your return. You have a whole report ready to go for them, telling them, what the investors, what they potentially could earn on it based on your comparables. The interesting thing about income producing commercial properties such as this type of real estate is considered commercial properties, even though it's people living in the homes. This is interesting because you can increase the rent simply by, making a few adjustments, making a few changes, pushing that rent up. You can highlight the fact that this is now worth more, and the value of the property, by increasing those rents, by making those changes, the value of the property increases immediately. That's the way this works in this type of asset. What other asset can you do that in? Where you do a fixer-upper and suddenly the property, no matter what the comparables are in the area, as long as it's not way out of line, are actually going to make it worth more. I mean, it's just crazy. Just crazy. Now, this thing, of course, had to pop up. I just wanted to show you the place to go to check out this type of property. If you're in the US, it's also available elsewhere. LoopNet. That's just one place. You can see them anywhere, but this is one place to kind of browse around. LoopNet. Okay, there you have it. Other ways to invest in real estate. This just shows you Jeff Bezos-backed Arrived Homes surpasses 200 single-family investment properties funded. There's a companies like this. I'm not trying to show you this particular company and what they do. They kind of go out there, get capital, buy these homes. There's so many different syndicators that will do this, okay? They get the capital from people and then they go buy homes, they go buy anything that's basically cash flow producing. Look for the term syndicator in when you're investing and trying to get into that for something different, a different way to look at it. I think it is important for people to understand what real estate is and that there's a lot of risk in it. There's no doubt about that. There's a lot of problems. There's so many things, but any asset has its own issues. It depends on what you want. What you need to have, you want the control? Do you want the maximum passive aspect of it? Do you want to have complete hands-on? You got handy skills, you're willing to do that? Maybe you don't have the capital. Maybe you know people who have the capital and you say, look, I'll manage the deal. I'm going to do the fixer-upper. I got the handy skills. All I need from you is that capital, and this is what you're going to make year over year over year, a month every month. I'm going to be paying you a paycheck. Doesn't that sound fantastic? Even when the economy is tanking, there are so many options today, but people need to put in the effort. Check out LoopNet. Look on your local, ask your realtors and things. These are ways to do this where you can make income. It's possible. You got to look into it. You got to put out the effort there. I hope you appreciated this video. If you want more like it, simply let me know in the comments down below. I'll bring the videos you want to know about every single day. I bring videos to you. Hit that subscribe. I'll see you tomorrow. Take care.